Okay, it hits exactly 2 o'clock. Good afternoon, everyone. Thanks for taking your valuable time attending this webinar, the first webinar in 2022, and it happened on the 22nd of February as well. We're talking about deep dive into tax statement automation, a topic very close to mine and Chris' heart. So for those people who don't know me, my name is Kevin Zhang. I'm the Technical Compliance Manager at Class. I've been working with Class for over 13 years. Now, it's a great pleasure for me to introduce my colleague, Chris Lai, who currently works as Customer Service Consultant. He also wears another hat as Tax Statement Specialist with 4 years experience with Class. He's probably one of the person I know that publishing most tax statements than anyone in this industry. Now, he has been working very closely with me on the tax statement projects. And to give you one example on his expertise on tax statements, there was one situation maybe about 2 years ago, and he approached to me saying that one of the tax statements issued by the share registry was incorrect. And this is probably the second year when they introduced the Attribution Management Investment Trust Scheme. And he's saying the AMI amount was completely wrong. I didn't initially believe what he said. And 2 weeks later, the listed trust actually made ASAE announcement. They have to basically withdraw the previous issued tax statements and issue the new ones. And the error they made was exactly what Chris has identified. It was to do with the AMI amount in the wrong sign. Okay, quick disclaimer about today's presentation. So everything we provided here is general in nature. They are not financial advice. We have made every effort to make sure the accuracy of the information, but no warranties provided and is subject to changes due to your feedback on the software. Now, we do have very packed agenda. So we'll cover the following. I normally would like to start the webinar with the purpose. So why does Class want to automate tax statements? Then at the beginning of this month, Class has obtained, again, the ASAE 3402 report on the tax statement data collection process. So I'll briefly touch base what this report means and how does that potentially benefit auditors and self-municipal fund administrators. Then we'll drill down to the coverage of Class tax statement templates and what do we mean by different ratio types. Chris will take over from the 4th item of the agenda, and he will go through a demo of manual versus automated tax statements. Then he will drill into common issues related to tax statement processing. They are included TFN withhold, parcel matches, stable securities, and how to handle ECPI method changes when you're entering tax statements. A couple of housekeeping items. So please use the Q&A box to ask any questions during the webinar. We have our colleagues Zahir, Bien, and Carla to answer any questions you may have. If time permitted, both Chris and I will answer some questions live at the end of this webinar. The webinar recording, the Q&A summary, and a PowerPoint slide will be shared in the following week. Let's get started. So why does Class want to automate tax statements? Processing distribution tax statements is often considered as one of the most difficult and challenging pain points facing many self-municipal fund administrators and accountants. I usually use this analogy. So if Class can solve this problem with automation and innovation, it's equivalent of Congress' successful quest of what I call a holy grail of self-municipal fund processing. It is often considered as the last step for end of financial year administration processing, but it's a bottleneck due to untimely and very poor quality of data. It's also prone to data entry errors. Largely, a very manual and skill-intensive process, often required experienced senior accountants and managers to review those tax statements. No industry providers or suppliers have even close to the complete set of distribution tax statement data. Yes, we heard of wrap and platform providers, but their fee for tax statements are often not that reliable, and they are often skewed towards its vertically integrated products. Now, what are the consequences as a result of this? It can cause significant delay in lodgement, and particularly tax refund for pension funds. The other drive to have a good tax statement data is coming from the industry. We see the growth of M funds and particularly exchange trade funds that effectively allow investors to own almost like a managed fund and list the trust directly without using an advisor or through a platform. So ETF growth has been highlighted in the media. We're seeing 35% growth in the numbers of ETFs compared to last year, 37% growth in the funds under management compared to last year, with total market capitalization over $131 billion on ASX. The other set of customers, like portfolio engine, robo-advisors, class portfolio clients, and class trust clients rely on accurate tax statement data equally as self-managed super fund clients. So that's the problem we are trying to tackle. Now, it's a good news that class has recently obtained the ASAE 3402 review again. Now, let me just say it outright. ASAE 3402 does not mean every tax statements template produced by class is 100% accurate, match exactly to the physical PDF tax statements you receive from your clients or directly from registry. What does it mean is that currently class has implemented a proper design of internal controls. The process of collecting the tax statement templates or ratios follow that controls very, very closely. Now, class currently source those distribution tax components mostly directly from the fund manager themselves. So we have very close relationship with most of the ETF providers. We also heavily use ASX announcement data, share and unit registry providers, as well as actual annual statements issued to the investors by the share registry directly. So we're crowdsourcing all this information. Class verifies the source data by reconciling at least 2 different independent sources of information. Then we design a very robust and effective controls around the tax statement collection process to ensure there are proper segregation of duties and maximize the accuracy and reliability of those tax statement templates. So what are some of the benefits? So from a self-managed super fund auditor perspective, they can use this ASAE 3402 report to significantly reduce their substantive testing around distribution tax components when financial reports were prepared utilizing the tax statement automation in class. From self-managed super fund administrators and accountants perspective, this means they can easily generate tax statement templates automatically for nearly 1,500 securities and what we call a widely held, so at least 100 plus funds or portfolios holding that particular managed funds or listed trusts without manually keying the data into the systems. Now, how do you actually get hold of this report? So Chris will quickly show you what this report looks like. Now, the target audience obviously is intended for the auditors. So if you want to get hold of the latest ASAE 3402 on tax statement process, then please send an email to support. If you are self-managed super fund auditors, obviously, as long as you can provide your name and email address, we'll watermark this report for your intended use. If you are administrators acting on behalf of an auditor, again, if you can supply your auditor's name and email address, we will do the same. Now, How much does class tax statement data currently cover? For FY 2021, we have compiled roughly 1,500 securities with the split about 20% ASX listed securities, 80% managed funds. We pretty much cover all the ASX listed securities, including very popular exchange traded funds, which I mentioned previously. And there's listed trusts and stable securities. Now, the period we start this project is usually start from 1st July 2021, and the coverage is to 31st January 2022 when we compiled that nearly 1,500 tax statement templates. Now, compared that to another major software house, which almost copy exactly or very similar functionality to our solutions, we have 4.5 times in terms of number of tax statement templates made available to our clients. And plus we have the ASAE 3402 assurance process review on the collection as well. So they provide only about 350 and mostly are just ASX listed securities. Now, before we start doing the demo of the tax statement functionality within class, I do want to briefly touch base on the ratio types. Currently, class with all the tax statement templates that we provide, each one will provide a unique ratio type, and they are constant, varying, and aggregated. And I will go through briefly what each type of ratio means. Constant, what that means is the underlying tax components are exactly the same regardless how many distribution they're paying for. Usually you expect this type of ratio associated with cash management trusts or fixed interest securities. What that means is if they pay 2 distributions during the year, each distribution will inherit the same components in that distribution. And therefore, if you have constant type of ratio, if you have unit movements, it does not impact on the tax statement output. The second type of what we call a varying ratio. So what that means is if a listed trust or managed funds are paying a half-yearly or quarterly distribution, each distribution will have its unique tax components breakdown. Class has sourced that breakdown from usually the fund manager themselves or from the corporate websites from those registry or fund manager providers. We are basically reverse engineering those components. And when we enter the tax statement templates, it's actually 4 templates instead of 1. So this also means regardless whether you buy and sell those type of listed trusts or managed funds, the ratio will be accurate as well. The common example of varying type of ratios are usually associated with exchange traded funds, particularly the Vanguard and iShares, as well as stable securities. And the final group, what we call aggregated tax statement ratio. So those tax statement components is usually aggregated to reflect overall distribution for the period. We have done some analysis on our client base, and close to 70% of all self-managed super funds don't actively trade, buy and sell their managed funds throughout the year. So for aggregated ratio, if we provide to those customers, it can still generate a tax statement template very accurately. If you do have buy and sell unit movements for those type, then we will give you a warning saying the ratio may not be available because if it's aggregated, it will not support the tax statement automations. But for majority of customers, that should be a good enough solution. And you tend to find some of the managed funds will have aggregated ratios. Now, I will pass on the next part of the presentation, manual versus automated tax statement, to Chris.
Thank you, Kevin. In class, if we process the distribution tax statement manually or the annual tax statement event using class automation template, then we need to consider a few prerequisites. First of all, we need to ensure that all of the purchase or disposal business events of the security are processed. Also, all of the corporations that are applicable to the security, for example, split or consolidation, takeover or merger, etc., as well as any distribution reinvestment, because these business events could change the number of holding units of a security. As Kevin previously mentioned, if that security ratio type is classified as aggregated by class, then the automation will not be available for that. And then we need to ensure that all of the distribution income are generated using the generate income feature in class, or you can process that manually. And ideally, we need to match up with the cash transaction. In terms of the AMIT cost-based adjustment, most of us are familiar with this, as the AMIT regime has been introduced long time ago, before 1st of July 2016. And AMIT stands for Attribution Managed Investment Trust. In the annual tax statement, we would see this field for the AMIT cost-based adjustment, increase or decrease. Sometimes they are called short form or exceed. In general, if the AMIT cost-based increase, we would enter the positive amount in the AMIT field in the tax statement event in class. Then we usually record the negative amount in the tax exempting amount field as a balancing figure to reconcile the attribution and the cash. The other way around, if the AMIT is decreased, we will enter negative AMIT and positive tax exempt. So if we look at the first handout of the beta share exchange traded fund with the ASAE code as A200, in the annual tax statement, page number 3, we can see this field. In terms of NCMI, it stands for non-concessional managed investment trust income. From 1st of July 2019, unless the transitional arrangement apply, the managed investment trust concessional withholding tax rate of 50% for certain fund payments is replaced with a 30% withholding rate, to the extent that the fund payment is attributable to non-concessional MIT income. So we also call it NCMI. We can also see these fields if we look at the first handout of beta share A200 on page number 2. We would later also show how these components are automated by class template in our demo superfund. In class, we could see these distribution tax statement events automated by class data feed, or if we use the Excel transaction loader to upload the events. Another scenario is that if the superfund setups one line wrap account, then the tax statement automation via the console will not be available. And there are scenarios where a security automation is not supported. For example, unlisted trust holding account that is manually created by the class users. Or if the automation for a listed security is currently unavailable, and then we could use this distribution tax statement event. In terms of the automatic annual tax statement, we usually recommend this option if the security are directly held. In other words, if the units are just sponsored or issuer sponsored, rather than hold through the wrap or platform provider. So now if we look at the demo superfund in class, usually class user navigate to the fund level, periodic processing, tax statement console. We could either generate the tax statement for each security individually. For example, let's say if we want to generate the tax statement for beta share A200. We're going to click on generate. In some cases, we would need to tick to use the distribution date. And then we can compare the components automatic by class with the actual tax statement PDF. And if we happy with that, then just click submit. So now let me split the screen to have a look at the handout. If we refer to the first handout of beta share A200 on page number 2, we can see that the dividend frank net of franking credit in the PDF is 17,750.71. And in class, it is 17,750.67. So only 4 cent difference, which is immaterial. In terms of franking credit, 7589.66. And per the PDF, it is 7589.64, so only 2 cents different. Another example is the discounted capital gains domestic and CTC concession, 181.65. So it matched precisely with the PDF. And we can see the emit cost by adjustment decrease is 562.53. So it's a negative amount. And class also populated that for the end user with only 1 cent difference. The other option is that we can process multiple security tax statement in book. For example, I'm going to select this and generate for all. Alternatively, I can select Vanguard VIS as the example and click generate. If we look at one example of the second handout, security code AOF, this is the user guide page 2021 tax statement template for ASAE listed security management and M fund. In this example, if we look for AOF, we can see that the ratio type is marked by class as constant. And this is the super fund. We can see that before 6th of May 2021, the fund didn't hold any AOF unit. As of 6th of May, 25,000 units has been bought. So in other words, there was purchase during the financial year. And if we look at the tax statement console, the automation is available for AOF. So class still support buy and sales in this example. Now we will discuss a few common issues related to tax statements that class users usually experience and how we can troubleshoot them. The first is the issue with TFN amount withhold. So in class, if we navigate to the super fund, what usually is at the tax statement console, we can see the example of AOF automation is available. The end user click on generate. And let me split the screen again. If we now refer to the second handout of the security AOF and compare the components side by side, we can see other Australian income is 462.50. That match with class with only 1 cent different. Discounted capital gain domestic is 91.17, and so is the CTC concession, which match perfectly with class automation. And the EBIT in this example is negative 292.99. In class is 293, again 1 cent. But when the end user review they see that the TFN amount withhold per the statement is 440, but in class it's currently left as blank. So what the client usually do is manually override this number, leave it as 440. We can see the net distribution now has been updated and matched with the PDF. And the user attempt to submit that. Then we got this error message saying the net distribution amount is not equal the cash distribution. So the resolution in this example, let's say from the manual processing point of view, it looks correct, but we would need to firstly reset the automation. Then navigate to transactions, browse event. Select financial year 2021. Group by account name. Our example is Australian Unity Office Fund. We can see that the distribution is currently unmatched. The amount is 937.5. If we now refer to transaction, net transactions group, we can see that all of the other security cash, transaction, and business event has been matched off, except this distribution payment from AOF. And if we tick both of them, we can see the difference is 440, which is the TFN amount withhold. That is why previously in the prerequisite slide, we mentioned that we recommend ideally to always match off cash and business event. And now if we use the class feature config to text to match them off, the system will do the job for the end user. If we refer to the brown business event, refresh the screen again. Look at Australian Unity. Now distribution has been updated to 497.50, match off with cash. And if we click on that, we can see the system capture the difference as TFN amount withhold, which is quite smart in this example. So the very last step is to navigate back to the console. If we now attempt to regenerate that again, reset. We can see that the system automatically pull the TFN amount withhold from the distribution cache event. And now we simply need to click submit the button. And that has been successfully processed. The next common issues that the class client have been facing is to do with the password match error message. So again, in class, if we navigate to periodic processing, period update, select financial year 21, and try to run the new period until 30 June 2021. Click process. We will see the error saying the cost base adjustment for security MGE cannot be matched on this date. From the troubleshooting piece, if we navigate to maintain password matches and search for MGE, we can see that on the 8th of December 2020, a corporation has been processed for MGE. Just a bit of background information about this. Magellan Fund Manager has gone through the corporate restructure in financial year 2021. In particular, on this implementation date, 8 December 2020, the MGE share, the MGE unit has been converted to the new class called Magellan Global Fund Open Class with the new ASIC code called MGOC. So the client has processed this corporation, hence the system locked this corporation with the prior historical parcels 1st July 2020 with the same quantity of 1,000. And then the client processed the distribution tax statement with the EBIT cost by adjustment decrease of 71.7. And when we run the period update, the system trying to match off these parcels with the prior one, but the system could then get that because the parcels on 1st of July 2020 has already been fully converted to the new security called MGOC, and it gets locked. The resolution in this case is that we're gonna navigate to investment, browse holding account. We can see the takeover merger script has been processed for NG on the 8th of December 2020. We would need to delete this corporation. And again, this is, it doesn't mean that the corporation is wrong. We simply need to delete that in order for the system to unlock the parcels. Then later we're gonna reprocess that again. Then now we're gonna navigate to the tax statement console and reset the MG. And click to generate again. There would be two options. We could either tick to use the distribution date. If we look at the effective date, currently it is 30 June 2021. But if we tick on it, it will be updated to be the same as the distribution cash event. And then we will need to submit it. The other alternative is to manually change the tax effective day from 30 June 2021 to be on the same day on one day before the corporation. So in this example, I'm gonna use with the second alternative. So I'm gonna leave it as 7th of December 2020 and submit event again. Then if we go to the review corporation and reprocess that again. Update partially, click yes. As a target holding account MGOC already exists, we don't need to click this button anymore. And apply the rollover relief and click to submit that. Now, if we quickly review the maintain parcel matches, and search for MGE again, we can see the order of the event has been updated. So the tax statement would be one day before the corporation. And this corporation has been processed on the 8th of December. So if we run the period update, it will go through successfully. As we can see, it has been successfully processed. And I will need to roll it back to go through the other demo example. Another common issues that our end user have been experiencing is to do with the stable security. So when considering stable security, usually they are quite problematic because of the income announcement around the financial year boundary. Usually, as we know, a stable security consists of at least one company and one trust stable together, and the distribution income is accessible based on the present entitlement basis, while the dividend is accessible on the payment basis. So we need to split the income across financial year to correctly reflect the tax treatment. And class automation is smart enough to do this for us and automate the tax statement component. If we now look at the knowledge base article in class, (2021) tax statement processing for stable security. So class actually covered these problems for the stable security and categorize them into 3 different groups, as we can see. In this example, we're going to pick CHC in group number 2. So class has split the total distributions of 19.31 cents to be the distribution income of 11.61 cents to be accessible income in financial year 2021, and the remaining 7.71 cents would be fully franked dividend that is accessible in financial year 2022. If we navigate to our super fund, browse business event, select financial year 21, group by account name, and have a look at the CHC. We can see class has already generated 3 income events. The source as income announcement auto generation, and classify them as dividend or distribution. Now, if we look at the dividend event and go ahead to process the tax statement for CSC, click on generate. And submit them. Then let me split the screen again. If we now refer to the third handout regarding CHC, we can see that per the statement, the frank dividend net of franking credit is 113.97. Then if we add up the dividend frank in the tax statement event of 47.31, with the dividend frank in the dividend event of 66.68, that is 113.99 compared to 113.97, that is 2 cents difference only. And if we add franking credit 28.58 with the 20.27, that is 48.85, and compared to franking credit in the PDF 48.84, so only 1 cent difference, which is immaterial. And in terms of the discounted capital gains, it is 91.58. So is the CCT concession. We can see that it's matched precisely with the PDF. And the MH cost base adjustment in this example is positive 75.59 to increase the cost base. And in class, that is different by 1 cent. So in general, CLAT is smart enough to generate all of those to save time and potential errors by the class end users. Our very last common issues that we have been experiencing is to do with the ECPI calculation method changes. At the superfund level, if we navigate to report, exception report, we can see this warning message stating ECPI calculation method changing. This is to do with the beta share Australia 200 ETF. The code is A200. In particular, in the first half of the year, the interim distribution exceeds the final distribution by 11,000. And for the second half of the year, the final distribution on the other way round exceeds the interim distribution by the same amount. So if we have a look at members, browse members, just a bit of background information about this demo superfund. From 1st of July 2020 until 1st of February 2021, the fund is deemed unsegregated because John only have 100% in pension and Susan have 100% in accumulation. As Susan's date of birth is 1st of February 1956, so as at 1st of February 2021, Susan reached 65 years old. In other words, she met the condition of release with new cash restriction. Then on the 2nd of February 2021, Susan established the accounts-based pension number 1 from 100% accumulation balance. So from the 2nd February 2021 until 30 June 2021, the fund is in deemed segregation phase. Now we can ask the reasons why we see that exception report warning message. If we have a look at the tax statement console, the tax statement for A200 has already been generated, and this is in another different superfund. If we click on view, we can see that in financial year 2021, A200 paid for quarter distribution, respectively on October, January, April, and June. And the October and January are not fully exempted, whereas the April and June are 100% ECPI. But the tax statement effective dates are on the same as 30 June 2021. Hence, we had the exception report warning message. So the resolution in this case would be, firstly, we need to click on edit and tick to use the distribution date. And again, before we tick that, the days is the same to be 30 June 2021. But after that, it will be updated to be the same as the distribution cash event. So the beauty of this is the system will prorata the cash amount to the respective distribution period and correctly split the tax statement component accordingly. We can see that if we click on the per distribution tab, in October, these are the component that the system split accordingly. And so is the other period. As we're happy with that, we're going to click submit. And if we refresh the exception report again, we can see it is now validated. The very last thing is that we need to roll back and rerun the period update. As we can see, there's a modified event caused by the update of the tax statement that we have processed a few minutes ago. So that would be the very last step of the resolution for this example. There are a few key things to take away. First of all, in terms of the digital PDF that some of the end user is trying to OCR via the function in the OCR tax statement console, sometimes even if it fails, we still recommend to upload the statement either directly to the upload function in the console, or if we navigate to fund document and drop the file to upload in there, then you could consider request the tax statement automation template by sending an email to support@class.com.au. In Class, we have a dedicated team to look after those automation template requests, then make it available in Class, so then you and your colleagues could save a lot of time and potential negligent errors when processing. Secondly, Class tax statement automation is based on the distribution cache or the DRP. So it is vital that we need to process all of the distribution event up to date, correctly double check, and ideally match off with cache before we continue with processing the tax statement. And we also need to understand different types of tax statement template ratios, in particular constant, varying, and aggregated. Like we previously mentioned, to some scenarios, we need to tick to use the due distribution date when generating the tax statement. For the superfund, switching from deemed segregated to unsegregated period or vice versa. And always, we recommend to refer to the actual tax statement PDF as the source of truth, and then compare with the automation in Class. And if you're happy with it, then you can submit the event. And that's the end of our webinar session. Thank you for your listening. If you have any questions, we would be available to answer them live.
Thanks, Chris. Thanks everyone for putting through a lot of questions. I will actually take the opportunity to answer someone's questions live. The first one, our firm's understanding of NCMI income for tax statements in Class by default is allocated to other. How does Class effectively handle NCMI related to capital gains? So very good question. It is correct that NCMI for Class by default, most of the components will automatically set into other income. That's because majority of the NCMI income that are related to NCMI non-primary production income, and sometimes you see it called clear building income. So it's only NCMI is only relevant for in my view for non-resident taxpayers, which they have a different holding regime. But as all self-managed super funds, and currently even for Class portfolio customers, we only really support resident taxpayers. Now, if you do have NCMI capital gain, we actually do map them to the capital gain components of the annual tax statements rather than other income. Now, a standard tax statement we roughly bring to 4 quadrants. You have your Australian income, your foreign income, your capital gain, and your non-assessable, non-exempt, and cost-based adjustment income. Second question I have is that probably answer the capital gain component. So does Class extract for annual tax statements realized capital gains report in Part D of the annual statements? The answer is yes, we do look into the tax components very, very, very closely and make sure they are proper grossing up, and we do try to reconcile everything to the summary report as well as cash components. Okay, there's another question we have there. Is possible to use formula for each annual tax statement components? For example, adding unfranked dividends, netting of foreign income from tax credits. So the answer to that question is you generally don't need to worry about this. Class will, when we create a tax template, we will analyze those numbers very, very closely. Since the introduction of AME regime, It used to be that under MIT, cash is king. Everything you still need to reconcile with the cash. With attribution management investment trust, attribution is the main source of truth to drive accessible incomes. Class still will make an attempt to reconcile cash very, very closely. So there's a field on class distribution tax statement called tax exempt amount. This is the only two fields on the tax statements where you can enter both positive and negative. The tax exempt amount is the one that you can enter negative amount, and that is effectively the balancing item. And the other field usually you will see tax statements is the AMIT, cost base adjustments, which will allow you to have an increase or decrease cost base. AMIT is not a cash component, so we do handle that closely. You will often see, if you see a tax statement, the AMIT amount often is exactly the reciprocal sign of the tax exempt amount. So for example, if you have a positive AMIT increase, tax exempt amount, you will often see a negative $100. Okay, another very good question I got from the audience. I've set out, does class support tax statements for broker fees? The answer is yes. Now, sometimes if you're not sure whether the underlying fees belong to a broker and platform, I strongly recommend you go to the user guide. It's the data feeds page where we break down the feeds into different type, and there's a broker feeds and platform feeds. So as a rule of thumb, platform feeds generally class do not support tax statements for these. We are hoping working each of the platform and right providers separately to have data feeds built to support those tax statements. Broker feeds, so the likes of ComSec, Bell Direct, CMC Market, NZ Online, all the ones we consider those ones as directly held, and class will support tax statements for broker feeds. Okay, another question I have, is there a reason the system does not default to use distribution date being ticked on tax statement event? So we can avoid situations like funds changing ECPI method. Very, very good questions. I personally believe that's probably a good enhancement request. Part of the reason we don't automatically tick use distribution date is because when you do that, if you do have a quarterly distribution, we'll apply the tax statement into the relevant quarters. And some of the clients may have already run a peer update or interim peer update throughout the year. For example, if they have a habit doing quarterly peer updates, or did a peer update because they start a pension or stop the pension. So if we use distribution date, then it will cause modify events to that peer update, then additional rolling back peer update may be required. It can only be problematic if the funds is actually changing the ECPI method. But if you have generally only run peer update for the whole year, and if you don't have the ECPI method change, then use end of financial year or use distribution date. It doesn't really matter. And another advantage of using distribution date, you will automatically handle the buy and sell situation. For example, if when Chris showed, but that was through a cooperation with Magellan. But if you actually fully sold the Magellan investments and the tax statement happened on you receive tax statement after 30 June. But if you actually tick use distribution date, you will automatically apply the tax component adjustments in the period where before you fully sold the investment. So you don't have to worry about towards the end. I think we should give a user a choice. Hence, so for certain funds, it makes perfect sense to use distribution date all the time. Yeah, I will consider that as an enhancement request for that purposes. Okay. Now, I'm just reviewing a couple other questions.
Yeah, there is one question we received, which is quite a good question, which is asked, there seems to be a lot of accessible non-receivable income for financial year 2021. what is the correct treatment for this amount in the tax statement processing? In general, this amount should be treated as tax exempt as a balancing figure to reconcile attribution and cash. But from Glass end, we have identified cases that, especially from different wrap and platform provider, the tax statement issued by them is not quite consistent. Sometimes this accessible or non-receivable income is inclusive of CGT concession, and the tax exempt sometimes is simply this tax exempt field only. But sometimes, let's say this amount is $100, but the tax exempt to reconcile is only 90. So the way that we would answer for this case is to look at the each of the provider, their treatment, and the actual tax statement PDF that you receive, then we would know how to record it correctly.
Yeah, it's another example that happened this financial year or FY21 was the senior airports. Senior airports actually didn't make any physical cash distribution, yet they still have a tax statements, which the income is accessible, but it will reflect as AML and a cost of adjustments. My original agenda did want to have extra bit to show how to process senior airports tax statement correctly and potentially even use Excel transaction loader to support that. Unfortunately, we ran out of time on this. What we plan to do is do a small recording of this and explain. So to answer this question, just add an additional comment to Chris's answer is that we definitely take into tax the accessible non-cash component very seriously, and to make sure they actually reconcile everything to what the tax statement is. Now, there are a couple of examples, clients saying I receive a negative interest income or foreign tax credits greater than foreign income. The foreign tax greater than foreign income, I've seen a couple of examples. For example, I think Planet International managed funds may have that. If you can send me a specific example, we do have a workaround to support that. But unfortunately, it's just a workaround so that you can recall and capture the correct foreign tax credits and the overall accessible income. So if you send an example through support, we'll follow that up. Unfortunately, I haven't seen a negative interest income. I've seen some of the unlisted trusts. So it's not widely held trusts where you have non-negative non-PP income and positive capital gain. Generally, those type of statements are not widely held and tend to be associated with property funds and unlisted trusts more. So if you can give me an example where you have a negative interest income, I really would like to see. And often you will see it's the consolidated tax statements. What I mean by that is sometimes they embed the fees and management fees together with tax statements, and therefore you see a negative amount in there. In that scenario, we normally recommend clients to process the fees separately as an expense, so the overall numbers is positive and it's correct. And if you look at the actual tax return of self-managed super fund, the interest income, for example, you cannot actually enter negative at all. M funds, so M funds are supported in a sense that what our rule of thumb is, if it's widely held and it's in our list, then we will support them. So what we tend to do is, if we actually do the tax statement templates or ratios for our underlying managed funds and equivalent of M funds, we will create the same ratio as well. So yes, for about 100 M funds, we actually support the tax statement ratio as well. Okay, it's almost exactly 3 o'clock. Thank you everyone for your wonderful questions and your participation in this webinar. As I said, recording of the webinar and the summary of Q&A sheet and PowerPoint slide will be made available to everyone shortly, hopefully early next week. Once again, thank you for your kind attention. Have a great afternoon.